Hello there, my name is Dorothy Perkins and I've been trading for almost 15 years. Welcome to another Forex video. No live trading video this week. There might not be one next week either, simply because I don't have one to upload. I am trading, I have some good positions open, but no recordings ready. I'm trying to record these trades from beginning to end, and the trades I'm in haven't ended yet, so there's no recording. But things are going really well. I'm really pleased with how that small account is building, and there'll be many more live trading videos to come on that account. Something a bit different this week. I am reaching a big milestone in my trading career. 15 years of trading, and about 13 of that is trading Forex. I have a lot that I could teach you and will teach you in this video. I have 10 things plus a bonus one probably, so 11 things I'm going to teach you. Crucial lessons I think you need to learn in order to become successful at trading, and I'm going to share them with you from the goodness of my heart, all for free. All I ask is that you listen, thumbs up, subscribe if you're not subscribed, and anything you want to add to this list, any lessons you've learned along the way, use the comment section below. So what is lesson one? What's the first thing that I want to share with you? What's one of the crucial lessons that I've learned that I think you need to learn? Number one is having the right broker. I have had correspondence with numerous traders over the years who have fallen victim to scam brokers and are unable to get their funds back that they deposited with the illegitimate broker. It is horrible to be victim of any scam, and some of these people have invested thousands, sometimes tens of thousands, I say invested, with these brokers, and they'll never get the money back. Not just scam Forex brokers, that's not just what you need to avoid. You also need to avoid unregulated brokers. So the whole point of lesson one, choosing the right broker, is it pays dividends to choose and trade with a broker that is well regulated. You'll have a much better trading experience, your funds will be more safe and secure. You'll generally find that the service is a lot more safe and reliable. I trade with a number of brokers. I have brokers all over the place, but most of my funds are kept with FCA regulated brokers. That is the UK financial regulator, and a lot of these brokers are based in London here in the UK. So most of my funds are with CMC Markets and IG Group. They're big London based Forex brokers. I also have trading accounts with Darwin X. That's also a London-based FCA regulated broker. I highly recommend them. I have a stock trading and ETF trading account with Hargreaves Lansdown, and I also have an account with IC Markets. Now, IC Markets is not as regulated as the other brokers I use, but I've been using them for about a decade, never had any issues, but they're not my main broker. I don't have a huge amount of capital with them, purely because of that regulation risk. So trade with a broker that is well regulated. Now what you'll find with a broker that's well regulated is leverage is a lot more sensible. You're looking at 1 to 30 leverage rather than 1 to 100 or 1 to 500, and that may put some of you off. I know some people choose their broker based on they offer high leverage, but high leverage isn't really going to make you profitable. It has no impact on your success as a trader, really. When you're looking at percentage returns, it has no impact on that whatsoever. So don't choose a broker based on leverage. Don't have that as your main reason. Have the primary reason for a broker being regulation. Trade with a broker that's well regulated, ideally regulated in the UK, the US or Australia. They're the three big financial regulators that are well trusted. So number one, choose the right broker. It will pay dividends. And for some people, it would have saved them tens of thousands of pounds or dollars or euros. Lesson number two. Okay, and this one's a bit different, something perhaps you've never thought about, and that is trading derivatives doesn't matter. Now, if you're new to Forex, this lesson may not be applicable to you, but for the older Forex traders, this lesson is more relevant. So when I first started trading, almost 15 years ago now, trading Forex using CFDs was really frowned upon in the sense that it was seen as quite dangerous, not to be trusted. But really, nowadays, nearly all Forex brokers, even the well-regulated, legitimate brokers, offer CFDs. They also offer spread betting and sometimes options as well. It doesn't really matter how you trade Forex if you're with a well-regulated broker. So I trade mostly CFDs and spread bets. That's how I trade. And I've known many traders, some who are far more successful than I am and have capital much greater than mine, and they simply spread bet with IG Group or CMC Markets or something like that. It really doesn't matter. With a well-regulated broker, these spread betting markets, CFD markets, track the underlying asset, track the actual currency pair to the dot. So there's no concern there whatsoever. If it's an easy way and a financially sensible way, if it makes financial sense to trade CFD spread betting, sometimes there's tax incentives to trade through spread bets, then do it. If, however, you're looking to invest in Forex or stocks, then generally trading the underlying asset makes more sense because of the overnight fees that Forex, CFD brokers and spread betting brokers charge. So if you want to invest in Twitter shares, purely as an example, or Apple or Google shares, whatever, then actually purchasing the stock is much better if you're a long-term investor than spread betting or CFD trading. Okay, any experience you've had with brokers or trading CFD, spread bets, good experiences, bad experiences, leave it in the comment section below. Let's share our experience with each other. Okay, number 3. Longer term trading is best. The biggest get rich quick gimmick in Forex is day trading. Okay, day trading is very flashy. It looks very exciting. It looks like you can make a very significant return very quickly. The reality is you'll find it very frustrating, very discouraging, and financially painful. Day trading is extremely risky and extremely hard. If you do have a goal to become a day trader, my suggestion is to become profitable at swing trading first anyway, and then move into day trading. Focus on longer term trading. It has so many benefits over day trading, such as, from my experience, it's far more profitable. Okay, so I'm a much more profitable trader when I swing trade than day trade. And from my experience with all the traders that I've met over the years, that is the case for everyone that I've ever met. And the biggest, most serious, most profitable traders I've met swing trade. They don't day trade. Another reason why you should swing trade over day trade is you'll find your win rate is probably better and you'll be a lot less emotional. So day trading really brings out those negative emotions because of the risk involved and because of the emotional suction that the charts create when you see that price go up and down. If you're watching that, you're going to become a lot more emotional. With swing trading, you can get distracted with other things and do other things, and you're not glued to the charts, so that emotion is a lot less. You also find that swing trading provides a much better lifestyle. I go to the gym every day. I can go for a walk. I can pick the kids up from school. I can even go out for lunch. I can do a lot with my day. It provides a much better lifestyle. It's much easier to take a day off. If I'm day trading, you're kind of glued to your charts. And you'll have some people, and they may even comment to this video and say, well, I only day trade 2 hours a day. I do the London Open. But from my experience, that's just not a real thing, and it's not sustainable long term. If I could just trade 2 hours a day and make huge returns, I would be doing that. I'm not. I'm swing trading. Another reason why swing trading is generally better over day trading is you can still have other commitments in the day. Most people trying to trade have families, they're studying or working, they might have a part-time job, a full-time job. If you're day trading, it's a lot harder to fulfill those other responsibilities. With swing trading, it's easy. You can swing trade on lunch break or after work or in the morning before work. It is so much more flexible. Lesson number 4. What's the fourth thing that I want to teach you? The fourth thing that I feel is really important, something I've learned over the last 15 years of trading. That is, use fundamental analysis. Now, people don't like this. It gets their backs up. They don't want to learn fundamental analysis. And that's usually because of one or two reasons. The first reason is they don't believe they can understand it, or they think it's really hard to understand. The second reason why people don't like fundamental analysis is generally they believe it will take away from their technical analysis. They love the charts and they don't want to replace that with fundamental analysis. But both of those, taking away from technical analysis and being really hard to understand, are both false. Okay, fundamental analysis I would say is actually easier than technical analysis. It's really fun, and it does not take away from technical analysis. You can see a chart in front of me. I use charts every day. I study charts. I love price action. I love looking at the indicators. I love studying price charts. They're a big part of my daily life as a trader. Fundamental analysis has not changed that whatsoever. The key is to use both. Combine fundamental analysis with technical analysis. It will make you so much more well-rounded and such a better trader. And from my experience, and I can only talk from my experience, it's made me so much more profitable with such a higher win rate. Okay, number 5, we're getting there. This video is going on, isn't it? Number 5, look for the best trading opportunities. Don't focus on the major pairs, Australian dollar, US dollar, Euro, US dollar, pound, US dollar CAD, US dollar yen, US dollar Swiss franc. Don't just focus on those 6. The more pairs, the more markets you can watch, the better. Okay, look at currency crosses, exotic pairs. The more pairs you watch, and also the more markets you watch, you don't have to necessarily limit yourself to Forex. I mostly do. But the more pairs you watch, the more trading opportunities you'll have. But also you'll be able to see the best trading opportunities. And that's lesson 5. What are the best trading opportunities this week, this month? Look for the best trading opportunities. If you're limited to 5-6 pairs, you're only going to see the best trading opportunities within those 5 or 6 pairs. Obviously, look at the whole range of markets. Sometimes the best trades are on crosses, not necessarily against the US dollar. Saying that, the best trades I've had using my strategies over the years have been on US dollar yen, but I've had significant returns on like pound Swiss franc. I've been recording trades recently, live trades on Canadian dollar, Norwegian krone, and I have a trade open at the moment doing very well, Euro, Norwegian krone. So look at all these other pairs. It will give you more opportunities and it will just make you more profitable as a trader. Please do that. Okay, number 6. Seek for long-term growth. Okay, do not expect to double your account this week, this month. Don't even look at your results this week, this month. Focus on long-term growth. Have a long-term plan. Think about trading over the next 12 months, not the next 12 days. Okay, I try to focus on quarters and years. So you have 4 quarters in a year and the year. Having that longer term perspective will really ease the trading pressure on you. The more pressure, the more emotion, the more risks, potentially the more losses, the more frustration, the more discouragement. So ease that pressure on yourself and try and make money this year rather than today or this week. So quarterly results, yearly results, focus on that. It will also make you more professional. If you approach any investment fund or any professional trader, they will tell you what they've made in the last year. They won't tell you what they've made in the last week or month. Okay, so they gauge their performance by year. You should too. Okay, number 7. A short one. I always regret trading my emotions. Trading your emotions can lead to short-term gains, but will always lead to long-term failure. Trading your emotions will lead to blown trading accounts, to losing money. Don't do it. And controlling those emotions and not trading those emotions is a whole other video by itself, and I could spend at least an hour just talking your ear off about how to control those emotions. This video is not about controlling your emotions. Point 7 is just don't do it. I have traded my emotions on and off over the last 15 years. Thankfully, with more time, the less frequently I've done that, and I'm not really an emotional trader now at all, though those temptations do come. But every time I have traded those emotions, it has not paid off. Okay, so just don't do it. Don't get sucked into a trade based on your emotions, whether that is excitement or fear of missing out or greed or whatever, impatience. Okay, number 8. This one is a bit more pragmatic. Place, limit and stop orders. Don't enter at market. So something I've noticed over the last 15 years is if I place a buy or sell order, I can really reduce the amount of losing trades that I have. So the way I trade, I obviously have a strategy, a detailed trading system in place that takes me from the beginning of a trade to the end. It tells me what to look for, what pairs to trade, which direction to trade, when to get in, when to get out. It covers everything in detail. But the end of the strategy, and all my strategies have had some sort of trigger or signal, entry signal. And that's generally like a price action setup or a break of support and resistance, something like that. But there's a trigger, there's a final thing that I look for to get me into a trade. Now, when I see that entry signal, that price action setup, I don't just enter at market. I place if I'm looking to go long, I place a buy order above the setup. If I'm looking to go short, a sell order below the setup. The amount of times that has saved me from bad trades is countless. Don't just enter at market. Always seek that final confirmation. Price needs to move in your desired direction to trigger the order. If it doesn't do that, you've saved yourself a losing trade. And do the same with closing trades. So if you're becoming emotional and you think you need to close a trade down, then bring a stop loss in place above a resistance or something. Same with a take profit. If you want to close a trade out, have a take profit. Always try and be triggered by a stop loss or a take profit rather than just executing at market based on your emotions. Okay, number 9. We are getting there. Anything I haven't mentioned yet, use the comment section below. If you have found any of these lessons, tips, advice useful, if you agree with any of them, let me know below. Okay, carry trading is extremely rewarding. Okay, and I don't mean having a carry trade strategy, but trading pairs that have a positive swap rate, especially if you're swing trading or looking to hold positions long term, can really pay off. Okay, so against the yen is a perfect example these last few years. If you had sold the yen and bought the US dollar, the pound, the euro, you would have seen huge returns holding those positions the last few years. It would have cost you nothing just to hold those positions. Obviously the exchange rate has been phenomenal, but the carry trade would also be phenomenal. That positive interest rate swap that you get, that payouts you get on a daily basis from your broker, I love it. Okay, you're getting paid literally to do nothing. Okay, so I have some trades open. I have a number of trades open, in fact, at the moment that are based on that positive swap rate. They're open. I get a positive amount from my broker every day. On a Wednesday, I get 3 days, which is the weekend, Saturday, Sunday, and the Wednesday. A 3-day payout. And this money just entering my account. I'm literally doing nothing. So if you can work trades around that positive swap rate, it is amazing. I don't know what else to say about it, really. But, yeah. Carry trade. I do have some notes here. You get paid to do nothing. Oh, something else I was going to mention about carry trading is it does help you to keep positions open for longer. So, with that carry trade incentive, that positive swap rate that you're receiving on a daily basis, it can help reduce that emotion to close the trade down. That's how I found things. Anyway, okay, number 10. I'm starting to waffle a bit now. Okay, number 10. Enjoyment, or lack of it, is the best gauge. So the number one reason why I trade is the money. If there's no money in trading, I wouldn't trade. It's as simple as that. So the main reason why we trade is to make money. But when we first started trading, we probably really loved it. It was exciting. It was fun. The learning curve was super interesting and we loved it. If at any point in your trading journey you find that you don't love it anymore, something is wrong and something needs to change. And this is a life lesson, isn't it? This is not just about trading. If you feel like this in your family, hopefully you don't, but if you feel like it in any work, in your studies, something is wrong and needs to change. Okay, so if I'm finding that my trading is becoming quite frustrating, discouraging, I'm not really enjoying it anymore, that's a signal to me that I need to change something. And that generally means I need to start simplifying things more. I need to reduce my risk. Maybe I need to have a break for a few days and come back. But pay attention to your feelings, because if you're not loving it, if you're not enjoying it, then you need to make a change. It doesn't mean you have to give up trading. I'm not saying that, but something has to change to help you start enjoying it again. Now, I mentioned a bonus lesson. I was going to do 10 tips, but there's number 11 I have to share with you. There's another one that I wanted to share, and that is one of the real keys to profitable trading, especially for the small fry like us who are retail traders who trade smaller accounts. One of the real keys to making trading work is to hold on to winning trades. Okay, it's to cut losing trades. Your losses need to be this big and your winners need to be this big. Your winners need to be very big, and for them to be very big, you don't want to risk a lot because that could potentially lead to large losses. You actually just want to hold on to winning positions for as long as possible, and that generally means you need to catch a trend and follow a trend. If you've been watching my live trading videos, you'll see that is what I do. My stop losses are quite tight. I'm looking to catch a big move, some big swings, and ride the waves. You need to have a strategy in place to do that. Catching a trend is seriously the ultimate way to growing a trading account. And when we talked about, when I mentioned thinking longer term, all you need to do is perhaps catch 3 or 4 trends in a year, and you'll see significant returns that year. It's as simple as that. It's not easy, but it's really simple. The trend is your friend. It's mentioned over and over again, but there is a lot of truth in that. Try and catch a trend, and if it has a positive swap rate, even better. You just hold on to this position and make money over the days, weeks, months that the position is open. Okay, so they are my tips, my advice, my lessons from the last 15 years. I could probably do another 10. There's so much that I could teach you. I thought these were the most beneficial to you. Share your lessons below, and I'll speak to you in another video.